Hello, welcome to Accounting 2010 Chapter 1 videos, Video 2, the financial statements. In 2010 we are studying financial accounting. In financial accounting we are primarily concerned with external users of our financial statements. These are going to be investors and creditors and other entities looking to see how we are doing as a business so they can make good sound decisions as to whether or not they should invest in us. And if you are a publicly traded company, and that's what we will be dealing with in this course, we must submit our financial statements to the U.S. Securities and Exchange Commission for public viewing. And the U.S. Securities and Exchange Commission will upload them into a service called EDGAR, which I will demonstrate later, for people to be able to review the financial statements. You will be using EDGAR to prepare a project in this course. So in financial accounting, we are looking at 4 financial statements. It is important that you memorize these financial statements and memorize them in the order of proper presentation. There is a number from each financial statement which flows to the next financial statement, and you will need this number to have everything work out in the end. So I use this to help me memorize the order, and I use a sentence: is she talking about bologna sandwiches, or is she talking about BS? So it says to me, is income statement, we'll prepare that first. She, the shareholders' equity, we'll prepare that second, because we're going to take the net income from the income statement and use it in the shareholders' equity. In the beginning of this course, we're going to be starting with a statement of retained earnings, and we will be building by the end of the course until we are incorporating stock, the contributed capital to the shareholders' equity. But in a sense, we're only going to be preparing half of the shareholders' equity statement with the statement of retained earnings in the beginning of the course. The third financial statement we will prepare will be the balance sheet, and we will need that number from the retained earnings or the shareholders' equity to complete our balance sheet, the equity section. And the fourth financial statement, we will just be reviewing the statement of cash flows. This is the final statement prepared. So in the order, we will first be preparing the income statement. The income statement will have the revenues we earned, the money we earned in the business, and there are many types of revenues, and we will be learning these types of revenues. Then we will subtract out the expenses that cost us to make the revenues. And it's really important in financial accounting that we use accrual basis accounting. What that means is we are going to be recording all of the expenses that are related to this period of time, some of which might not be paid, but we are having to charge them off for this period of time. It will give us a proper reflection of the money we earned. If we forego or delay recording expenses, and it looks like we have very little expenses, and we record all possible revenue, it inflates our net income, and that is not a fair and accurate representation of our business. So if you take revenue minus expenses, it leaves us with the net income for the period. Secondly, at least to begin with, we're going to be preparing the statement of retained earnings. This is 1/2 basically of the statement of shareholders' equity. We'll focus on that. And how we do that is we take the beginning retained earnings balance. Now if we're a new company, it would be 0. Any problem you'll have, it will tell you if you have one. If you don't see one, go ahead and use 0. We're going to add in any net income. That net income right here, that's going to carry down right in here. You're going to put it right there. And that's going to be how much your retained or kept earnings in the business, because you didn't need to use it to cover expenses. If you had a loss for the period, if instead of a positive number you had a negative number, that's a loss, and we would have to subtract it out, because that money is going to have to come out of previously retained earnings. Now that's not good. We can't do that very long, can we? We're not going to stay in business, but we have to take it out. That money's got to come from somewhere. Finally, we're going to look and see, did we pay any dividends to our shareholders, because that has to come out of retained earnings. If you do not see any dividends, and companies do not have to pay dividends, that is it to their discretion. We'll talk about that later. Then it's possible there's a zero here. This is going to give you the ending balance in your retained earnings. Now, if we were expanding, and we will by Chapter 13, to the entire shareholders' equity account, we'll be taking that retained earnings and adding in any stock, any money that we have gotten contributed to us in the form of stock. So we'll be adding that in. That's what stock is. It's contributed capital. People are giving us money to be part of our business. That will give us our total shareholders' equity. That is the reality, as you'll see in when I show you the SEC, the reality. But for the first chapters, we'll just be focusing on this. So memorize, write this down. You'll be tested on it. Finally, the last test item is the balance sheet, and you know this. Assets equal liabilities plus equity. And we'll be learning to do this. You'll list your assets, any liabilities, bills you still owe, and you're going to take that ending balance of the retained earnings, or ultimately the shareholders' equity, and add it in here. And the bills you owe plus that equity will give you, should be equal to the balance of the assets account, or as Pacioli said, if the left does not equal the right, you may not sleep at night. So when you're doing your tests, go ahead and say to yourself, is my left equaling my right? If it's not, you've done something wrong. So the final statement is the statement of cash flows, and we can actually track why our cash account changed from one at the beginning of the period to the end of the period. And it's a really cool and vital financial statement. We don't learn about it too much in principles, but if you go on to intermediate, you will learn about it. So I want to make you aware of it, and we'll talk about it a bit, but not too much. You will not be tested on it. The first three statements, you will be tested 3 times. There are well over 100 points of your total score just on being able to prepare those 3 statements. So learn it now. So I'm going to take you out to the SEC. We're going to go out here, and I'm going to show you just very quickly that we can go and do Edgar search tools and company filings. So company filings, you need to know this because you will use it for your financial analysis project. And I'm just going to show you really quickly. One of the companies we will be looking at is Kohl's. So I'm going to show you Kohl's. We can search it. Kohl's right here. We can click on it. And when it comes up, you're going to see a lot of different filings. Kohl's has filed all of this with the SEC. You are going to be primarily interested in their 10K. Write that down, 10K. And you're going to go to interactive data. This is relatively new with the SEC. It's XBRL filings. So click on the 10K interactive data. I'll explain XBRL in class. And then if you look over to the left, financial statements, you've got a balance sheet, you've got an income statement, you've got shareholders' equity, and you've got a statement of cash flows. So there you go. You will be able to, by the end of this class, look at these documents and understand what they mean. So now we're going to go back to the PowerPoint and finish it up. So we're back to that sheet that we talked about in the last video, assets equal liability and shareholders equity, all those accounts that fall under here. In Chapter 2, we're going to start looking at the transactions, the day-to-day events that help us to determine what goes into those financial statements. That's in Chapter 2.